If you are trying trading BTMM but ignoring price action, you are making a very big mistake. Price action is actually the core of how the market moves. But when combined with the BTMM, it gives you sniper entries and confirmation for every trade. Tell me how many times you have entered a trade and almost immediately the market moves 40, 50, even 100 pips against you. The biggest reason is because you are not able to read price action. You're not able to tell when the price is actually in a very strong momentum, or when the price is set up for reversal, or when the price is actually at a trap zone. The key rejections candles right here at the low of the day, those key rejections, they are significant to inform when the market is ready to move in your favor. So basically, when you talk of price action, the big question is, can you be able to tell what is happening on the chart without the presence of any indicator, right? Can you be able to identify key chart patterns? Can you be able to identify key candlestick formations that you would actually take a trade based off? That way, you will know that when those particular candlestick formations or chart patterns appear at a certain level, you already have your trade. And that now, combined with the indicators, gives you confluence. You cannot rely on indicators alone. Market does not respect any indicator unless you are able to master and read what the price is doing. In many cases, if you're not able to read the price and read it correctly, then you will find yourself taking the wrong trades just because you are not able to identify key market behavior that would help you eliminate bad trades. For instance, at a key reversal zone, you expect to find certain candlestick formations, an evening star, a shooting star, a dark cloud pattern, a shooting star, a bearish engulfing. All these are reversal candlestick formations at the high or peak formation high. At the peak formation low, you would expect to find candlesticks like piercing pattern, tweezer bottom, or something we call in BTMM railroad tracks. You would expect to find hammers. You would expect to find bullish engulfing, right? And all these candles would help you now take a trade that is in line with the market maker moves. In other words, having the key price action concepts at your fingertips will help you identify good and quality trades very quickly and also avoid those false trades that will not be helpful. There is no way you can say you trade purely based off indicators, meaning it is ultimately important for you to pay key attention or a considerable amount of time to learn and master price action. Price action is simply the study of how price moves on the chart without relying on any indicators. It's based on candlestick patterns, which shows how price reacts at key levels, support and resistance, which is actually the foundation of market structure, and finally, the trend and market cycles, which helps identify reversals and continuations. When you master price action, you can predict moves before indicators even confirm them. BTMM is built around understanding market maker manipulation, and price action helps you see it happening in real time. So it will help you actually identify stop hands, right? You will see them when the market makers are trapping traders. Secondly, it will help you confirm reversals using candlesticks to actually validate your entries. And it will also help you avoid fake breakouts, which is actually being able to identify the real versus the false moves. When you combine price action with BTMM indicators, your accuracy improves dramatically. Now, let's talk about how to use price action within the BTMM strategy. BTMM, in as much as is a powerful trading method, it also relies heavily on how the market is behaving. And so being able to understand how the market is moving and what the market is saying at certain key levels will help you determine a good trading decision and a bad trading decision. In other words, the market gives you fake signals and it also gives you good signals. But how you differentiate between the two is when you're able to read and understand what the price is saying. And I doubt the indicators would tell you that. So it's my advice, and not only for BTMM, but for any other strategy, that you're able to properly determine what is happening in the market using price action alone. From there, it lays the foundation for you to be able to now incorporate indicators and be able to determine what is happening in the market with ease. After all, the indicators have been created just to ease in the process, but not to eliminate the power of price action. I hope you understand, and I believe by now you have an idea of why it is important for you to pay close attention to what is happening in the market using the price action alone. When the market is at the low of the day and the high of the day, certain behavior is witnessed. When the market hits a wall and it's not breaking it, when the market hits a certain level and it keeps struggling to break it, hits it, bounces back, hits it again, bounces back. These are key indications that there is a lot of rejection around that area. And so if you are to take a trade that is in line with the current trend, you will find yourself held by a wick when the market is reversing to the opposite direction. It's something that you do not want. In any case, you'd want to get that as a sniper entry that pays you some good money, right? For instance, let's assume you are in the market, and because you've realized the market is going up, when it gets here, that's when you're placing your buys because you're feeling that you're missing this entire move. You feel that you ought to be in the market. And so you execute a buy. After all, you are told, follow the trend. So once you execute a buy right there, what does the market do? Bounces. And as you expect it, probably to respect this particular zone and continue going up, what happens? It peels off. And so you lose all your money, right? So what am I trying to say? You have to ensure you pay close attention to what the price is doing at certain key levels. So this is the high of the day. We know we are not going to be looking for buys. No way. We are looking for sells. Sells and sells only. And so if you are looking for a sell here, maybe you missed this one, so you took it right here after the close of that candle, because again, this is a clear double top. So you take the sell, stop loss is above, and the market paid nicely, right? Now, I'm not saying you're going to see everything as it is. Sometimes you're going to miss some things. Sometimes you're going to have false breakouts, but most of the times it will help you eliminate those bad trades and give you those quality trade setups. So this is to just reaffirm that the importance of price action cannot and will never be skipped by any strategy. Whether you're trading the ICT concepts, whether you're trading the BTMM, whether you're trading the smart money concept, it doesn't matter. The key price action concepts for BTMM are: one, look for the market maker traps at major support and resistance levels. Could be the low of the day, the high of the day, the low of the week, the high of the week, and so on and so forth. Two, use candlestick confirmations. The pin bars, the engulfing candles, the railroad tracks, or the tweezer bottom, tweezer tops, before actually you execute your trades. And number three, identify the 3-day cycle to know when price is actually ready to move. Never rely only on indicators. Always check price action first to avoid bad trades. Have you ever studied how the market behaves at the low and the high of the day? Have you ever asked yourself, how do I get those sniper entries at the low of the day, right? And at the high of the day, so that I can always get the real move before it happens, right? How do I actually get to tell that if I was coming in the market and I didn't have this entire move from right here, right? We don't have this entire move. How would I have reacted around here? So let me suppose I only had these two levels, the low of the day, the high of the day. I'm coming to trade New York session. How would I have reacted when the market was right here and when the market was right here, right? So without all the indicators, you must be able to tell where are those key reversal points, because now that eliminates a lot of troubles and struggles, right? The key elements of price action are candlestick formations and the chart patterns. Candlestick formations will help you see the level, and chart formations will help you see the reversals. And all of them play a big part in being able to get those good trades. And if price action still feels confusing, then I've got you covered. Download the Candlestick Bible, all for free, in the description below this video. That book will help you a lot in trying to crack a nut in your price action struggles. Price action is the basis and the foundation of all strategies. And so it's important for you to understand it. And that's it for this video. Thank you so much for your time. Hope to see you in the next one. Peace out.